Great, welcome guys. Welcome to the pre-market overview, September 9th. Happy Wednesday to you all. Hope the markets have been good to you so far this week. So for those that might not know me, my name is Becky. That's me there. My email address, becky@tradewithufos.com, if you have any questions about anything I covered today. Plus there's the support team, support@tradewithufos.com. Obviously being a team, normally better at responses in terms of the quickness to replying. So support@tradewithufos.com as well if you need anything or have any questions. So again, for those that are newer, that might be joining us for the first or second time and don't really know what's going on, I'm just going to explain what it is that we do, what the pre-market overview is, just so you get a bit more context. So every day we send out a newsletter, Monday to Friday. And in that newsletter, we go through 4 of the major markets in the world. We talk about where they're going in terms of direction, how long we think they're going to go in that direction for. We talk about UFOs, so unfilled orders, meaning where price could turn, volatility, and news as well, high volatility news. So we cover a lot, but it's only a 2-page document. So we do this pre-market overview for 15-20 minutes every day to just expand on those concepts, explain a bit more as to how we came to those conclusions, and show you how we use the technology as well. So that's what I'll be doing for the next 15-20 minutes. If you want to subscribe to the newsletter and get that yourself every day so that you can use that document for yourself, just email us at newsletter@tradewithufos.com and we'll put you on that subscription list. Okay, so for those joining us from within Tradewith, just a reminder, you have futures and options sessions today. So futures at 9 a.m. and options at 1 p.m. Eastern. Tuesdays and Thursdays, those are your stocks and investing days, so a bit more longer term on Tuesdays and Thursdays. And then sharpening over the weekend, which is going to be psychology sessions, reinforcing methodology, questions and answers, things like that. So you have a bit more time over the weekend to focus on things that aren't so much about necessarily placing live trades, but understanding more theory, concept, psychology as well. Now, in terms of classes, and this could be for anybody from within or outside of the Tradewith channel already that might want to learn these concepts from the ground up. The next class we have is the backtesting class. That's next weekend. Yeah, not this weekend coming, weekend after that. September 19th to the 20th. Starts at 2 p.m. Eastern. Then we have futures, stocks, psychology and trading plans for the rest of September and October. So you've got those dates there. You can go to the website, www.tradewithufos.com/youcantrade, and you'll be able to get a lot more information about those classes, when we do them, how we do them, how they work. So I just need to put up the disclaimer. Obviously, it's important that I put it up, not just for legal reasons, but it is actually a decent bit of advice as well. Just to understand that, of course, there is a risk involved in trading. You need to understand that there is a risk and you need to be able to take that risk for yourself. It is ultimately up to you what trades you place, when you place them, how much money you put on them, what account size you use, etc. All of those things. Again, I won't read this disclaimer to you, but you guys can obviously come back and read it later if you want to pause the video and read it. Or if you go to the website, which is www.youcantrade.com, you'll get additional disclosure information on there so you can read all the legalities around. So one more reminder, and then I'll go and show you the newsletter. We have an app on the App Store. So we don't have one for Android just yet, so watch this space, that will be coming soon. But for the time being, we have a You Can Trade app on the App Store, so you can follow us mobilely if you'd like to. Okay, so now we've done all of that, let's take a look at the newsletter. So the newsletter is what we have here on the right-hand side. That goes out every single day, Monday to Friday, before the market opens. Now, what we go through on each of them, also what we go through on the newsletters, 4 of the major markets in the world. We have the S&P, that's one of the major equity indexes in the world. We have oil and gold, obviously major commodities, and then the euro, the highest traded currency pair when we look at it as the euro versus the US dollar. So lots of volume goes through those markets. So very big markets, very highly traded, which means that even if you don't trade these markets directly, I'm sure what you trade will have some sort of correlation to these markets or be impacted by what happens in these markets. Now, we also look for each of these markets, we look at a daily chart. Now, again, of course, different things happen on different time frames. So if you trade much higher or much smaller time frames, things could be quite different. But obviously, the daily is probably the most commonly used time frame. It is definitely what most people use, whether they're long-term trading or short-term trading. They're going to be using the daily chart at some point in their analysis. It's very commonly used, hence why we use the daily chart. Now, for each of these markets, what we're going to look at, first of all, is climate. So climate refers to in which direction is the market going, but more importantly, what are the probabilities associated with it? Effectively, it's what's the trend and what's the probabilities for that trend. We also want to understand propagating, which is how long can we expect that trend to continue? If the market's going up, how long can we expect it to keep going up for? If the market's going down, how long can we expect it to keep going down for? So the statistics we use to help us with that, with these propagating figures here, on the right-hand side, those numbers refer to how long that market usually goes in that direction for. So if we're in an upwards trend, how long does it normally go up? If we're in a downwards trend, how long does it normally go down? And then we see on the left-hand side, this is where we're at now. Sorry, my box was open. There we go. This is where we're at now relative to that. So how many candles have we already been going in that direction for? So it gives us a probability based on where we're at relative to what normally happens relative to the probabilities, whether or not we can expect a continuous move to that direction, or whether or not we might expect those probabilities to lessen, and therefore that might change our decision making. So we use our auto climate app to give us these numbers, to give us not just the climate, but the probabilities and the propagating figures. The auto climate app is shown on the chart on the bottom here. I'll come back to it in a minute and explain to you how we use it in a little bit more depth. What we also want to understand is nearest UFOs. So UFO stands for unfilled order. What that means is where we expect there to be big stacks of buy orders in the market that could push it upwards, or big stacks of sell orders in the market that could push it downwards. So where are these orders that could turn price, that could push it up or push it down? So we use our Auto UFO app to highlight for us on a chart where those orders are likely to be, so we can see visually where we might want to place trades or where we might want to make decisions. So I'll show you here on the left-hand side, we have our green UFOs. That means there are buy orders. And we have red UFOs. That means there are sell orders. So again, it's just visually highlighting for us on a chart where we expect there to be orders that could move price up or down. So we're using technology here and statistics and probabilities to help us make decisions so that something else analyzes the market data for us in a much more objective and efficient way than we can, making it easier for us to decide what we're going to do every day. So we're going to go through that for each market. What we're also going to understand is volatility. So volatility means how far we expect prices to move within given periods of time. So basically what we do is we look at this current implied volatility column here, and you'll see that each of these numbers are a percentage. Now what that means is, so I'm just looking at one of the numbers there, doesn't look right. I might check that. The current implied volatility, the percentages there, refer to the movement up or down that is expected in 1 year as a percentage of its current value. So it gives us an idea of how far we can see price move up or down within a year as a percentage. Now from that, we can reverse engineer it and understand what that looks like per day in terms of what we can expect in terms of movement up or down in a day, same up or down in a week, and up or down in a month. So we get an idea from volatility as to how far we might expect price to move within these given periods of time. And then we use the climate and the propagating to give us an idea of in which direction that's going to be. And then we use the nearest UFOs to tell us where that trend, where that direction, where that movement might stop and turn around and go the other way. So we'll go through each of these per market. So lots to go through. Then we'll come down and look at news. So we're starting with the S&P. You'll notice here that we are looking at $SPX.X. That's the symbol that we're using here on TradeStation. That's the symbol that's used on TradeStation for the index for the S&P. So we see from this, we have our Auto Climate app on the bottom. That is showing us a thick red dot. Don't worry about the lines. For now, it's just the dot and its thickness. So it's a thick red dot. Now, Auto Climate app can show us one of three things. So it can either show us a thick blue dot. That tells us that we're in a confirmed upwards climate. If it's blue, then it's upwards. Confirmed upwards climate means we're in an upwards trend, upwards market environment, and that we have probabilities to the upside. It could show us a thick red dot. That's what it shows us here. That tells us we're in a confirmed downwards trend. So confirmed downwards market, confirmed downwards climate, and probabilities to the downside. Now it could show us a thin dot of either color. That's the third thing it can show us. The color still tells us the direction. If it's blue, it's up. If it's red, it's down. But the fact that it's a thin dot, that is the Auto Climate app's way of telling us that we have less probabilities, less statistical advantage, and therefore on those days we tend to keep away, not do anything. Here at Tradictive, it's all about only acting when we have probabilities on our side so that it can be a consistent thing that we do. If we have less probabilities or lower statistical advantage, normally it's not worth doing anything. Now, in this case, we have a thick red dot, confirmed downwards climate, probability to the downside. Now, we've seen quite a jump yesterday, quite a gap yesterday on that movement down, and on its way, it formed a red UFO. So that's the closest stack of sell orders there, as highlighted by that red UFO. That's at 3426.96 to 3479.15. Closest stack of buy orders is this one here, just below us. So we're very, very close between buy orders and sell orders at the moment. Closest stack of buy orders there is 3294.61 to 3284.53. Now, we said we had a confirmed downwards trend, confirmed downwards climate. Normally, the S&P would go down for 4 candles on a daily chart. By the way, everything that's on that right-hand side, I'm going to round it up. Whatever the number is, I'm going to round it up. So normally the S&P goes down for 4 candles and we are on candle number 2, meaning we are halfway into what a normal movement is to the downside. So we've still got probabilities of a continuous move to the downside, but do bear in mind that we do have a big stack of buy orders just there. So it might be that it goes down for another day, hits that stack of buy orders and turns around, or it might be that the climate is strong enough that it continues to push through the buy orders. So kind of not as many probabilities to the downside as we'd want because of the presence of buy orders, but overall we have a confirmed downwards climate, probabilities for a continuous move down, and sell orders just above us. So overall, more probabilities to the downside there for the S&P. Now, in terms of volatility for the S&P, we look at the VIX and we see from that we expect movement up or down in 1 year of 31.15%. That tells us that we would expect movement up or down in 1 day of 65 points, in a week up or down of 1.44 points, and in a month up or down of 3 points even. So again, that just tells us how far we expect price to move within those given periods of time. So next market, we're going to look at oil at CL. That's the continuous futures contract there for oil. I'm just going to move it a little bit so we see it a bit better. There we are. So once again, thick red dot, confirmed downwards climate, probabilities to the downside. Closest stack of sell orders just there at 41.37 to 41.87. Then we have our closest stack of buy orders. We'll see there's 2 just on top of each other, but the top one is 26.31 to 25.80. Now, normally, oil would go down for 7 candles in a row, and we're on candle number 6. So we still have probabilities for a continuous move down at least for another day. I wouldn't be surprised if we actually see it go past that. Sometimes things go outside of probabilities. Just because something is probable doesn't mean it's definite. Just because something usually happens doesn't mean it's always going to happen that way. So, of course, we still need to manage our risk just in case we're wrong. And at the moment, we've got buy orders quite a way below us. So nothing really to stop a move to the downside in terms of orders. So again, different forces they're playing off against each other. We have a confirmed downwards climate, probabilities to the downside, and sell orders above us. However, we are coming to the end of what we would expect to be a continuous move down. So not 100%, obviously nothing ever is to the downside, but again, more probabilities there to the downside with oil than anything else. Okay, so with oil, we expect that we would have a movement up or down in 1 year of 55.90% up or down. That means in a day, a movement up or down of 1.32 points. In a week, up or down of 2.91 points. And in a month, up or down of 6.05 points. Now, the reason I thought that this was strange is because it's much higher than it has been before, but we've seen a lot more. If we look at this, price didn't really do much for quite a long time. It kind of, the range was very, very small, and we've suddenly seen quite sharp move to the downside. So that would account for why that number's gone up quite drastically. Okay, so that's oil. Let's look at gold. So at GC, that's the continuous futures contract for gold. Let's have a look. Okay, so once again, thick red dot, confirmed downwards climate, probabilities to the downside. Closest stack of sell orders just there above us, 1973.7 to 2001.2 or 2001.2, however you want to say it. Closest stack of buy orders a little way below us there, 1836.7 to 1825.9. Now, normally, gold would go down for 3 candles, and we're on candle number 4, which tells us we've gone past what is statistically likely. We have gone past what is probable for a normal move to the downside, which means we might expect that price might turn relatively soon. So again, probabilities to the downside, sell orders closer, but coming to the end of having already gone past the end of what would be a normal move. So we lack probabilities from that side. So when it comes to volatility, we look at GVZ.X and we see that we expect a movement up or down in a year of 22.49%, which means in a day, a movement up or down of 27.4 points, in a week, up or down of 60.3 points, and in a month, movement up or down of 125.4 points. Okay, let's look at the last market. We're looking at the euro versus the US dollar. That's the spot forex currency pair. Just going to scrunch it together a little bit there if we can, so we see it. There we go. So with this one, this is the first one that's showing us something different on our auto climate. Remember I said the auto climate can also show us a thin dot of either color. This is a thin red dot. Now the fact that it's red is telling us that there is movement to the downside, that we have a downwards climate. However, it's thin. That means less probabilities, less statistical advantage, which means we choose to do nothing. Now, we show you on the newsletter that something is an unconfirmed climate by putting a little cross next to the arrow. So the arrow will tell you whether it's up or down. If it's confirmed, then it's just the arrow. If it's unconfirmed, so less probabilities, we put the little cross there. So this one has a little cross to tell you unconfirmed climate. In terms of orders, we have sell orders just there at 1.1901 to 1.2012, just rounded that where it needs to be. Close a stack of buy orders here at 1.1597 to 1.1507. Again, just rounded that where it needs to be to the pip. Now you'll notice as well that we have a whole bunch of buy orders underneath us there. Buy orders after buy orders after buy orders. I think it's 8 or 9 in a row underneath each other. And what that means is we have a lot of buying pressure underneath price right now. We have a lot of buying pressure underneath us. Yes, we have a new stack of sell orders above us and we have a downwards climate, but it's unconfirmed. So basically a lot of indecision, mixed signals here. Lots of buy orders beneath us, a climate that doesn't really know what it's doing, sell orders above us. Again, best to just keep away from markets like this when we don't really know what's going on. Again, as well, just to point out, normally the euro US dollar would go down for 4 candles and we're on candle number 5. So again, we might expect that this climate might change soon. So again, mixed signals, keep away would be my my advice. Okay, so with the euro, we see that we would expect a movement up or down in 1 year of 8.11%, which means in a day, up or down of 60 pips, in a week, up or down of 132 pips, and in a month, up or down of 275 pips. So again, the volatility gives us an idea of how far we expect prices to move up or down within given periods of time. These numbers come from options pricing, so it comes from professional traders' opinions. With the climate and the propagating, we have an idea of if we're going to see that movement, how or in which direction is that movement going to happen based on analyzing market data and objective probabilities there. The nearest UFOs and also the propagating as well gives us an idea of where price might change direction, where price might hit a stack of orders and turn and go the other way. Again, all based on technology, analyzing market data for us and giving us the probabilities there. Again, just because something's probable doesn't make it definite. So we do manage our risk just in case, but that's how we do things. That's how we use the technology. So hopefully that gives you guys a bit more background to the newsletter and what that means. Now, a couple more things to go through. So I'm just going to make this big now and zoom in a bit as we come down and look at news. So we talk about news as an indirect force. The reason for that is because the most direct force that we have in the markets to move it up or down are buy orders and sell orders. That's it, buying and selling. That's what makes price move. Now, of course, there are different reasons for why price moves. One of them could be news or reporting, which is why we look at that as an indirect force. But we still need to be aware of it. It could encourage new orders to come into the market or encourage people to cancel their orders, which means we might see a bit more volatility. So we need to be aware of that. So for us, we look at fxstreet.com/economic-calendar. And on that, we filter by high impact news and by US markets. So of course, if you want to look at things outside of that, you can change the filters if you go to that link and see what fits your trade plan a bit better. For us, high impact news and US markets, and we see from that we have nothing planned until this Friday in terms of scheduled reporting that could have a high impact on the markets. So nothing really to talk about today, but something really to focus on for Friday. Okay, so that's everything from me today in terms of the newsletter. A couple of reminders for those that are already within Tradictive. You have your future session at 9 a.m. Eastern and then options at 1 p.m. Eastern. So we'll see you there. Also at 4:15 p.m. Eastern, my colleague Boyan will be coming back to look at what did happen in the market, what went as expected, what didn't go as expected, what can we learn, how can we move forward with our trading. So don't miss that 4:15 p.m. If you're not already part of the fun and you want to be, you can join us at tradictive.com/youcantrade. As a member of the channel, you'll get access to our futures, options, stocks, investing, sharpening, psychology sessions, as well as support that you'll have through support@tradictive.com. So if you go to tradictive.com/youcantrade, you can learn more about it then. Now, I get that there are loads of places to learn how to trade. It can be really confusing to choose which one makes the most sense to you, which one's going to suit your lifestyle or the way you think better. And again, not everything is for everybody. So you can try us out for 14 days, couple of weeks, just to see if it makes sense. If it doesn't, no problem, you cancel the subscription. If it does, then you've had a good couple of weeks to know that it really suits you. So you can try us out for free for 14 days. Now, in terms of classes, for those that might want to learn a little bit more about classes, the next one we have is the backtesting class. I just noticed there's a typo there. It says trading plans, but it's the backtesting link. It is the backtesting one that's next. So if you go to tradictive.com/backtesting live, then you can learn more about it there. Of course, you can look at the trading plans one as well, or stocks, futures, and psychology. Now, you can register for any course and get an additional course for free, thanks to You Can Trade. So again, if you want to go to the website, you can have a look at which ones suit you best, which ones, how you can put it together in such a way so that you can make the best of that deal. If you have questions on anything, not just courses or subscription, but if you have questions on the technology that we use or anything that I've said today, if you have any questions about it, you can email us support@tradictive.com. Always happy to help. We're all traders, all willing to help you. Otherwise, I will let you guys crack on with your day. Hope you have a great trading day. Have a great Wednesday. I'll be back tomorrow at 8 a.m. Eastern to go through it again. So take care, guys. Have a good day. Bye-bye.